All right. Okay, we are ready to go. So this flashcard is going to what will help us with our knowledge check, kind of, learning reminders of what we've read. But no worries, we're still going to do the textbooks tomorrow. Just that it's late and we're all tired. I don't want to go into textbook lots of information. So this is like a low-hanging fruit to get us started with. So now, when a renewable life insurance policy is renewed, how are the face value and premiums affected? All right, so this is ethics, okay? So this is a flashcard on ethics, and what flashcards is all about. Flashcards is just key, questions and answers and all that. So let's look at the answers. It said, due to the fact that the insured is older upon renewal, there will be an increase in premium cost and the face value will remain the same. Okay, so like in terms of term insurance, what we are usually told is that, okay, this policy is renewable and is convertible. But if you take term 10, for instance, and is renewing in the next 10 years, after 10 years, when it's renewing, the impact of that is that your premium will go up because, number one, you're older by 10 years than you were when you first got the policy. Does that make sense? That's why I say when a renewable life insurance policy is renewed, how are the face value and premium affected? The face value stays the same, but the premium goes up, definitely. Does that make sense? Yeah. Please unmute yourself so that I can hear you when you respond. Any questions around that?
Nope. Okay.
Okay.
Hello?
Hello?
Yeah, I wanted to say something. So that means the face value of your capital remains the same, but
yes,
the premium you paid every month as it changes.
Yes, the premium you pay every month will go up.
Okay.
Okay. All right. Okay. So the next one, say insurance companies, also known as insurers, can be incorporated in two different ways. What are the ways in which they can be incorporated? What are the two ways that insurance company can be incorporated? So federally or provincially. So they can be incorporated federally or provincially, okay? Federally incorporated companies are able to carry on businesses across all the provinces in Canada, and provincial ones are only able to do businesses in the province in which they are incorporated, okay? What this is talking about is that, for instance, if your business is an Alberta registered company, you can only do business in Alberta. Same way, if your business is registered as Ontario business, you can only do business in Ontario. But if your business is incorporated as a federal incorporation, then you can do business across Canada. That's what this is talking about. Okay? Which organization is responsible for transforming laws passed by the government and interpreted by the court into rules for the Canadian insurance industry to follow? Okay, let's see what this is. The Canadian Life and Health Insurance Association. All right, so this is the body that is responsible for transforming laws that are passed by the government and interpreted by the court into rules for the Canadian insurance industry to follow. So that body is called the Canadian Life and Health Insurance Association. Canadian Life and Health, Life and Health, okay, Insurance Association. Okay. What federal office is responsible for ensuring that companies have sufficient assets to honor their policies? What federal office is responsible for ensuring that companies have sufficient access to honor their policies. The Office of the Superintendent of Financial Institution, OSFI, ensures that the companies have sufficient assets to honor their policies. The Office of the Superintendent of Financial Institution, Office of Superintendent, okay? Just remember, superintendent. Does that make sense? So yeah, is the one that have authority to ensure that insurance companies have enough assets to carry out their work and to honor their policies. Okay. What are the legal requirements for an agent to sell insurance in Canada? What are the legal requirements? You and I, for us to sell insurance, this is about us now. What are the legal requirements? Let's see.
Exactly.
Licensed. Licensed. That's why we are here. Sleepless night, Sunday night, where we suppose days are duvet, the cools. You know, we are here studying because we need to be licensed, right? We need to enter into an agency contract, and that's what we have with Experience Financial Group. You need to practice the highest standard code of conduct, and you need to acquire error and omission license. Okay? Remember, you have to be licensed. You have to have a contract with an agency. You can't just say, hey, I have my license. And that's why even when you pass your license, Experience have to sponsor you, okay, before AIC release a license. All right? What act regulates insurance at the federal level? Hello?
Hello?
The Insurance Companies Act. So what act regulates insurance companies at the federal level? It's simply the Insurance Companies Act, right? Okay, let's do this one. Over the years, the Insurance Act of all common law companies have become very similar collectively. The provincial acts are referred to as Uniform Insurance Act, Quebec Act of Quebec, however, has a different insurance act, and why? Okay, you know, Quebec, they have their own different stuff. And why is that?
Because they are French.
Why are they like? Because they are French, right? Well, the province's laws are based on common law and therefore have a uniform act. Quebec law, however, is based on civil law, and so it has a different insurance act. So all of us in other provinces, we have, you know, similar whatever, but Quebec, so because their own is based on civil law, so they have a different insurance act. Okay. What body is responsible for governing the marketing of life insurance policy? And which body is that? Let's see. The Provincial Insurance Act are responsible for the marketing of the insurance product and are therefore regulated by provincial insurance regulators.
So what is the difference between the federal insurance act that we previously talked about and this very one?
Okay, so the body responsible for governing the marketing of life insurance policy. So this one is marketing of life insurance policies, marketing. So the other one that we talked about federally, like we talked about federal incorporation. Is it the one we talked regarding federal incorporations you're talking about?
I think the Federal Insurance Body Act also. Talking about a body that something, it's still a body, Sha.
It's still a body. I wish I can go back.
I think regulate insurance on, I don't know.
I remember that one with that particular question. He said, okay,
Yeah.
I should have noted it down. Well, we
Let's
might
know
come
the difference
across it
between,
again.
yeah, it doesn't be confusing.
You just need to, yeah, you just need to know that the Provincial Insurance
Dealing with
Act
marketing.
are responsible for the marketing, because this has to do with the province in which that particular life insurance company is carrying out business. That's why it's regulated by the province of their residence. And then the provincial this is responsible for, and therefore regulated by the insurance regulators. Okay, under what type of law are life insurance contracts enforced? Life insurance contracts are enforced under the term of contract law. Okay, so the kind of law is a contract, right? Because life insurance, the insured enter into a contract with the insurance company, right? Whereby the insurance company promised to indemnify in the event that the risk occur, and in exchange, the insured pays premium. So it's a law of contract. Okay, guys?
Okay.
All right, moving
Contract.
on. We have another one here. Tort. Tort law protects those who have suffered injury or damage as a result of criminal or not criminal conduct. And on the compensation, they will receive tort law compensates a person. And on the compensation they will receive, tort law compensates a person who has been harmed or any damage caused by wrongful civil behavior. However, can insurance agents protect themselves against a claim against them under tort law? Let me ask you guys now, can we protect against ourselves against under the tort law? Let's see.
So
Life
what they
insurance
talk about?
agents protect themselves from tort law claims by carrying error and omission insurance, right? That's how we protect ourselves. And that's why when you guys get licensed now, even before you get licensed, we need to, once you have passed your first, second, and third provisions, I think at that point, we have confidence, so we can pay for error and omission. So that as soon as you finish your final exams, we apply for your license immediately, because you won't be able to apply for a license if you don't carry error and omission. And that is to protect us in case of we make any mistakes, right? Does that make sense?
Yeah.
Okay, moving on. Azuri is an industry-sponsored, non-profit, federally incorporated consumer protection plan for public owners and purchasers of related products. However, how does Azuri provide protection for insurance policyholders? This one is a very interesting one, because every now and then people ask me, okay, what happens to my policy? What happens to my funds, my investment in the event that this insurance company go bankrupt? I always tell them, don't worry. There is Azuri protection in place, okay? So now here we are. If any member insurance company becomes insolvent, Azuri facilitates the transfer of its policy to a relevant company, and ensure benefit continue under the original terms of the policy. What this means is that, say Joy, I have Joy Insurance Company, okay? Rachel, are you there? Rachel? Rachel? Okay, Sister Kenny, are you
Yes, sorry, I
there?
was on mute. I'm here. I was on mute. Sorry.
Yeah, I'm here.
Okay, so let's say Rachel, we have Rachel Insurance Company as
Yeah,
well.
please.
So I am an insurance company, Rachel is an insurance company. And then for some reason, maybe I am becoming insolvent, that is, I'm having difficulty meeting my obligations and my company as an insurance company is in trouble. So Azuri is going to step in to take over all the life insurance investment that are in my portfolio and move them to Rachel and put them under Rachel's management and ensure that the terms and conditions of those contracts stays the same, regardless of where it's being migrated to. Okay, this is one of the things that Azuri does. All right, it ensures that benefits continue under the original terms of the policies. Also, sorry about that, I need to quickly drink water. All right, the next one. What makes an insurance contract voidable? Voidable means that what makes it possible for us for an insurance contract not to be valid anymore. Can we think of any? A contract is voidable if one party has been wronged by the other. For example, a contract with minors are voidable because a minor cannot be bound by a contract. Yes. If you enter into a contract with a minor, that contract cannot be binding on that minor. It's a voidable contract. Okay? There we go. Awesome. Moving on. What element must be present in order for a contract to exist? Okay, I like this one. What element must be present in order for a contract to exist? I think they have got to be offer and acceptance, right? Do you guys remember that? Yes. For a contract to exist, they have got to be offer to purchase by the proposed insured, and the offer have to be accepted. Yeah. And then consideration is the payment, right? Consideration is provided by the proposed insured to the insurer. So the compensation is in this instance now, in terms of insurance policy, will be the premium, the payment of paying the first premium. Very key. Okay. Excuse me. All right, we move on to Emma was filling out her insurance application and accidentally filled in the year of her birth as 1988 instead of 1989. Is this considered a mistake or a misrepresentation? And what is the difference? Is this a mistake or a misrepresentation? It said the thing I've told us here, Emma was accidentally filled in. So, this will be a mistake. Emma did not do this intentionally. And furthermore, there will be no benefit to the client to inform the insurance company that she is older than really is, as this will result in a higher premium and have no benefit to her. A mistake is not a conscious act, whereas a misrepresentation may not be a conscious act. That's interesting. Okay. Next. Does anybody want to volunteer to read so we can stay awake?
Boring.
So, are you reading? Okay. Clark is a healthy, exercise regularly. No, Clark is healthy. He exercises regularly and maintains a healthy diet. He works in an office as a graphic designer. However, Clark also likes to skydive a few times a year for fun. While meeting with his insurance agent, Clark decided not to mention the fact that he skydives. He had heard that he might have to pay a higher premium for having a risky lifestyle. if he tells the insurance company about his hobby, since he only does this a few times a year, he prefer they don't need to know about it. What type of misrepresentation is this? And how might it affect the policy? What kind of misrepresentation? This failure to disclose his skydiving hobby is considered a material misrepresentation. A material misrepresentation is a misrepresentation of a fact. Okay? Yeah, and which, if the truth has been known, an insurer refusing to insure the policy or charging a higher premium for it. Yes, a material misrepresentation is anything that you know when you disclose it, it will make the insurance company to either not insure the individual or charge a higher premium. Okay, in exchange to insure them. Awesome. All right, moving on. What is the duration of the incontestability period? Hey, you guys should remember this, right? Incontestability period. What's the duration? You guys remember?
Is it 90 days?
90 what? Don't tell me that. Come on, guys.
I need to go back to my book. It's okay.
Incontestability period is the first 2 years that a policy is in force. It's first 2 years. Come on. Okay. All insurance contracts are unilateral contracts. What does this mean? All insurance contracts are unilateral contracts. What does this mean? Let's see. What does it mean by all insurance contracts are unilateral? Well, this means that the insurance company is the only party bound by the contract and is obligated to fulfill the contract as long as premium is paid, whereas the insured can cancel it at any time. Okay. Did we understand that? All insurance contracts are unilateral contracts because the insurance company is the only party bound by the contract. The insurance company is the only party bound by the contract in the sense that the life insured can cancel that anytime. Okay? Make sense? The life insured can cancel the policy.
But when you cancel your policy, what happens, Seth?
Nothing happens. So now depends on what happens. Sorry, I'm trying to get something here. What happens is a function of what kind of policy you have. Okay? If you have a universal life that has a cash value, then there is going to be an adjustment on your cash value, which is your adjusted cost basis will be put into consideration to determine if you're going to get some money or not. But if it's a term insurance, nothing happens. In fact, it's the easiest to cancel.
So the premium you have paid has gone. All the premium you paid.
That's it now. Term insurance is like that. Okay. What do you say?
I said okay.
Yeah, because with term insurance, your premium is just like an expenses. Okay?
Yeah.
Jenny has 2 life insurance policies with HLL Insurance. The insured are her 2 daughters, Sarah and Jessica. Sarah is the beneficiary named on the Jessica's policy. This is a tricky one. Jenny has 2 life insurance policies with JKL Insurance. The insured are her 2 daughters, Sarah and Jessica. Okay? Sarah and Jessica. Sarah is the beneficiary named on Jessica's policy. And Jessica is the beneficiary named on Sarah's policy. Wow, interesting. What 2 parties have entered into an insurance contract? No, wait a minute. Okay, Sarah is the beneficiary named on Jessica's policy, and Jessica is the beneficiary named on Sarah's policy. What 2 parties have entered into an insurance contract and therefore have the contractual rights associated with these policies? Which 2 parties? Which 2 parties? Party with compulsory right in an insurance contract at the insurance company. Okay. So it should be the insurance company, and what's their mother's name? And Jenny then. Yeah. And the person who makes the contract with the insurer, which is Jenny. Yeah. Do we understand? Do we understand the principle? Hello? Do we understand this principle? All right, moving on. Tommy has applied for the insurance, for life insurance on the life of his friend, Sam. Tommy does not have an insurable interest on Sam in any way, but he is willing to pay the premium. How would the insurance company respond to him? He's willing to pay the premium, but he doesn't have an insurable interest. Oh my God. I don't see how you will do this. So the insurance company will not issue. Exactly. They won't issue because it doesn't have any insurable interest, right? Okay. David purchased life insurance in 2009, naming his daughter Juliet as the sole beneficiary of the policy. In 2010, he married Melissa and moved in with her and her daughter. Okay. Mandy that's in 2012. David updated his will, and in his will, David designates the proceeds of his life insurance policy to be splitted 50-50 between his daughter Julie and his new stepdaughter Mandy. If David dies today, who will be considered the beneficiary of the policy? Okay. Okay. Does anybody have the answer? Yeah. Let's see. If a beneficiary of the insurance proceeds is named in the will, and a letter declaration named a different beneficiary for the insurance proceeds, the beneficiary name closest to the death of the insured will prevail. Okay, pretty straightforward, huh? I think so. I think it's very, very straightforward.
It's not, is it straightforward? What do that mean, the one closest to the dead? What is, but he
Okay,
asked that they split it
let's say
50-50 now.
Mr. Joseph has a life insurance, and Mr. Joseph has named his daughter Mary as the beneficiary, right? All this happened in 2020. Fast forward into 2021. Mr. Joseph now maybe married another wife and named a new wife as the beneficiary. So before you know it, Mr. Joseph is dead. So the last update that is the closest one to the time of death is the one that will be upheld. So if Mr. Joseph, after marrying a new wife, decided to change his beneficiary into his life insurance from the daughter to the new wife, that would be what would prevail.
Okay.
Does it make sense now?
Yeah.
Awesome. Elle and Emily were married and lived together in a beautiful home in Toronto. Before they divorced, Elle and Emily were so busy moving into their new homes and splitting their bank accounts, and they forgot to update their insurance policies. Oh my God. If Elle and Emily did not change the beneficiaries in their policy, one of them dies, how would the fact that they are now divorced impact the death benefits? You guys remember we touched on this before, right? Okay. Nothing is going to change. If they forgot to update their beneficiaries, it doesn't matter if they are divorced. That will be upheld. Okay. So the surviving experts will still receive the death benefit. This Quebec. Anyways, we don't need to worry about Quebec because we don't focus on Quebec in any of our exams. So forget about Quebec and their different way of doing things. If the spouse of the policyholder has been named as a beneficiary and the party subsequently divorced, the divorce does not alter the rights of the former spouse. Can we mute ourselves, please? Okay. Is that clear?
Joy, please, can I leave? Can you send me this thing, please? So that we study tonight, please.
Sir Joy,
Okay.
It's late, as in my little baby has not slept and is coming to a bit cranky.
All right. Okay, move on to the next one. Yeah, if you want to leave, you can leave, okay? I'll send everybody the recording. Okay? What party is said to control an insurance policy? Who control an insurance policy? An insurance policy is controlled by the policy owner. The policy owner named the beneficiary, decides whether to take a loan or make a withdrawal, is able to terminate the policy and can decide if the policy should be assigned. So you as the policy owner, you control the easy. Okay, so right, there we go. Next one. Andrea went into a financial institution to take out a loan in order to purchase a car. The financial institution insisted that he purchase a life policy to insure the loan. Identify the professional standard that the financial institution has violated. What is the professional standard? Is tied selling. Oh, wow. Why does fiduciary duty exist for an insurance advisor? Fiduciary duties. Why does it exist for a financial advisor? Let's see. Okay. Fiduciary responsibility exists in a client-advisor relationship because a client depends on the information supplied by a life insurance agent. Affairs of the client must be kept confidential at all times. The life insurance agent has a duty to advise fully and honestly with the skills, with care and skills, and in good faith. A life insurance agent must keep meticulous records at all undertaken on behalf of the client. Awesome. Okay, the next one. Dallas and Brendan both work for ABC Financials. Dallas worked on the investment side and Brendan works on in insurance. Dallas and Brendan has a mutual client, Damien. Damien recently met with Brendan to purchase term life insurance. He requested for insurance because he said that he was not able to afford his premium. Brendan receives Damien's let me see, I need to scroll this down. Oh, so okay. Requested because I was not able to pay high premiums. Brendan receives Brendan perceived Damien as someone who made a lot of money. He decided to double check with Dallas on Damien's income and what kind of asset he has. Okay. Would Dallas be in violation of a professional standard if he provides Brendan with this information? If so, which one? Okay. Dallas will be violating. One second, please. Okay. Dallas will be violating a privacy and confidential standard if he provides this information to Brendan. Yeah, that's kind of creepy, right? Hey, all right. On what principles in ethics of conduct? On what principle is ethical conduct based? On what principle is ethical conduct based? What principle? Let's see. Know your client, fiduciary responsibility, and requirement for privacy and confidentiality. Code of conduct. Interesting. Okay. What potential consequences could an agent who failed to live up to his or her fiduciary duty face? Are the consequences that an agent suspension of the life license, fines, lawsuits, imprisonment. Okay, if you face any of this. Sorry, here you go. Sorry, I'll soon finish. Okay. All right. Gina is a life insurance agent, and her brother Matthew is a marketing professional. Matthew has been helping Gina with many aspects of her business, including, oh, Kendrick, no, now. Thank you. Okay, can you leave now, please? All right. Including her websites, contact management, database, and her business cards and designs. Matthew asked Gina for 25% of her commission for the next year to compensate him for his contribution to her business. Can Gina agree to his proposal? Life insurance agents cannot share commissions with anybody who is not also a life insurance license. Gina can pay Matthew a fixed fee for his assistance based on the service he provided to Gina. However, it cannot be dependent on the commissions Gina earns as life insurance agent. Wow. Jane is an insurance agent, and she recently hired Kelly as her sales assistant. And during their first meeting, which was set up to discuss how Kelly was adjusting to her new position. Thank you. Jane asked Kelly if she has life insurance herself. Oh, Kendrick, I'm not finding this funny anymore, okay? Can you stop this, please? Can you go meet Sissy and Dada? Okay, if you're going to stay here, could you please stop pulling out the lights? This is disturbing me. Yeah, okay, take this, go. I'm not using this one. Yeah, go with it. Okay, yeah, you hold it.
Lift your leg.
Watch out.
Lift it higher. Okay, other one. Out.
All right. Where was I? Okay, Jane asked Kelly if she has life insurance herself. Kelly admits that she does not. Jane recommends that Kelly purchase a few different insurance policies for herself, since that is the business she now works in. What type of unfair trade practice is Jane using to sell life insurance to Kelly? Oh my gosh. This is undue influence. Using undue influence on her. And why is it undue influence? It's undue influence because this involves a person taking advantage of a position of power over another person. And since Jane is Kelly's boss, she may feel that she needs to do everything Kelly tells her to do in order to retain her job. Wow. Okay. Misha is a very successful insurance agent, and she has the top agent at her company for 8 years in a row. And okay, let me read this again. Misha is a very successful insurance agent, and she has been the top agent at her company for 8 years in a row. Misha and her company are very proud of her continuous success, and we're considering adding top agents to her business cards. Is there a professional standard that will be violated if Mitchell did this? Is there a professional standard, right? Because I consider to make a top agent. Let's see. The Code of Ethics for Agents stipulates that members cannot be referred to sales results in the use of advertisement. Calling herself a top agent or a leading agent will put Misha in a violation of this policy, and this falls under misrepresentation. Wow. Denise has not been in the office very much this year, and her sales numbers are lower than usual. She has been in the business for several years and has several clients with enforced policies. In order to generate some revenue, Denise decided to replace some of her clients' existing policies with new policies to ensure that insurers do not realize this. Denise will make sure that her clients get new policies with a different company, even if they are a little more expensive. Oh my God. This is bad. What Denise is doing is not good, period. Okay? This is called twisting. Again, the way I want you guys to remember twisting, you know, when you're twisting your hand, chances are that your hand will be twisted across each other like this, right? So anytime you see something related to selling insurance business, replacing insurance business with a different company, that is twisting. Okay? If it's with a different insurance company, it is twisting. Okay? Twisting occurs when an agent introduces policyholder to surrender, induces a policyholder to surrender an existing policy with one insurer and replace it with another insurer, you know, to the detriment of the policyholder. You see, twisting is not a bad thing if you are doing it in the interest of the policyholder. But when your game plan is to make sales, and even though a client is paying, okay. Your client, Andy, will be leaving his job at a large architect company and started his own consulting business. When he leaves, his existing company will no longer be a member. When he leaves his existing company, he will no longer be a member of his group plan, and therefore would like to purchase his own term life insurance. If you, the agent, replaced Andy's policy with that of a different insurance company, will you be violating the professional standard? No. Okay. You see, the answer is no. Your job will be to provide the best plans for David, regardless of insurance companies, blah, 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 blah. Okay. Jerry meets with his insurance agent 3 times to ensure that he thoroughly understands his family's needs and life insurance can meet this needs. Okay, let's take that again. Jerry meets with his insurance agent 3 times to ensure that he thoroughly understands his family's needs and life insurance meets it, and how life insurance meets his needs. The insurance agents have spent considerable time educating Jerry and is concerned that he is not going to buy any insurance even after all the time spent together. So the agents offered Jerry a 200 rebate to help him make up his mind. What type of unfair trade practice is the agent doing? Okay, I think this is let's see. Yeah, this is premium rebating. Okay, agents cannot be anything. Agents cannot do anything that might sway the independent judgment of the client with respect to acquiring an insurance policy. Okay. All right, moving on. Error and omission insurance is mandatory for insurance agents, and most provinces also mandate the amount of coverage each agent must have. Error and omission insurance protect both the agent and the customer. However, okay, so how does error and omission insurance provide protection for the client? How does error and omission provide protection for the client? A client can be confident that if in the event that they have to make a claim against the agent, that there is a sufficient financial backing to pay their claim. Okay, even me, my eyes are like closing. Okay, let's see what we do till 11:30. Okay. What's this? Okay, is that the end? Oh, this is the end. Oh, thank God. Okay, so that marks the end of the let me drink some water. That marks the end of the flashcards. Okay, so sis, we'll continue tomorrow, but if you have time during the day tomorrow, you can try to register for the exam again. Typically by tomorrow morning, you should be able to register. Okay. If you have any question doing that, feel free to come. All right, so this is where we will stop tonight. Thank you very much for your time, and